This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And this video is going to be a recap of my weekly and monthly reviews because we have finished the month of August 2025. So let's take a look at these performance stats. Let's see what we got here. Let's go to this month. You can see that I actually finished August in drawdown, but really not much because I had a really solid way to end the month. You can see how many red days that I had. I had 11 red days, a day win percentage of 26.67%, and a trade win percentage of 16%. But I was still only down 2.46 R on the month. You would think with these statistics, I'd probably be down well over 9 R on the month, which shows a lot about what my model is and like what it does and how it performs. It's basically a low strike rate, high reward model. So there's going to be a lot of losing trades in between the winning trades that I do catch, but when I catch the winning trades, I'm able to capitalize on them extremely well, and that's what puts me up on the month, which is what I executed on last month. Last month I finished up 3.38 R, which is still slightly profitable. Last month I really struggled with actually catching the move and framing these setups. I just lacked confidence in my ability to consistently execute on these ideas. And this month, I was trading a lot. I traded a lot. This month still lacked a bit of my market approach, but I think it would be better if we just got into it. So if we look at my overall P&L, we can see that I'm currently in the state of break-even trading, right? Well, let me get myself out of the way. All right, I'm gonna stay down here in this corner. So we can see that for the last 3 months, I've been a break-even trader. But I believe we're the point I'm at right now, and how I feel about myself and where I'm at in my journey and how I just continue to show up every single day. And as long as I carry out my day-to-day processes and my habits, I get better by default. So I know that I'm on the dawn of profitability. Literally. Like, this is it, guys. This is fucking it. A few more months, maybe even a few more weeks, maybe even just 1 month, and I know that I'm going to start getting paid from this because I have a systematic process that I repeat, and it works, Now, right now, me as the operator of that model, of that process and that system, there's some flaws and some kinks that I need to work out, which is why I'm not yet profitable right now, which is why I'm break even, which is why I'm giving back. But I continue to show up every day. I continue to study where I'm going wrong and where I'm going right, and I continue to refine my processes and get better and eliminate the trading mistakes that I make, which is why I had this great week to end the month. And at the end of last week, I finished last week slightly green, and I knew at the end of last week I was ready. I knew at the end of last week I was finally ready to attempt an eval after 3 months of demo trading, because the main constraint in my trading is market approach, and I nailed that last week. Carrying that into this week, and I'm still able to perform pretty well, up 4.49 R on the month, or on the week, right? So it's looking good, guys. It's looking really, really good. So I'm going to explain how I arrived at my weekly review, the process that I kind of went through. So if you go through my session recaps, you can see that at the end of each week, I'm doing a session recap. We see I have 4 weekly recaps for the month of August, and then 1 monthly review at the end of August. So the weekly reviews are kind of where I'm going in and studying each and every trading day and extracting as much information from that as possible so I can know exactly where I'm going wrong and exactly where I'm going right throughout that week. So I start by just running through some performance stats. And then, like I said earlier, the main constraint in my trading right now is market approach, because the basis for all my bad trading days starts with the incorrect market approach. Either I get it entirely wrong or I'm indecisive. If we look at my report and all the tags that I have, you can see that when I get my market approach incorrect, it's pretty costly, right? That is my number one most costly mistakes. So this tag right here, as I have all the tags traded over the course of August for the mistakes that I made. So my most costly mistake is going to be simply having an incorrect approach to the market, and that is my most costly down almost 5R on that mistake. The second most costly is going to be an impulsive trade, which showed me a lot about my mode of entry and how I actually get into a trade. I noted that, and one of you guys noted this in the comments. You left a pretty good... Let's see if I can pull it up here. I think it was on this video. Let's see. Yeah, right here. I've been watching your videos for a while, and I'm definitely rooting for you on your journey to become a profitable trader. One thing that stands out to me is it just seems like you don't actually have a very clear and defined trading strategy with a clear entry model. And this was true right here, right? So this comment kind of got me thinking. So I appreciate you, TWiz93. You speak a lot about what you think will happen, what should happen, instead of just executing your model when it presents itself. While your analysis and data collection is nothing sort of commendable and admirable, there can be a possibility of over-analysis being detrimental to your progress. Just a thought. As I said before, I'm here to follow your rooting for you to succeed. So I appreciate the comment. This part right here is definitely true. So that is reflected in the mistakes that I made over the course of this month. If we go back to the reports, you can see that an impulsive trade, an early entry. Okay, if we put these two together, that's the reason for 8 losing trades this month. 8 times this month, I took a trade that did not actually have confirmation. The early entry tag is when I traded in the right direction, but I simply mistimed the move. I got an early entry. An impulsive trade is where I'm just going in there, just throwing risk on for literally no reason. There's no confirmation, nothing to do at all. So combine those two, and I have 8 losing trades where I'm trading without any confirmation at all. So that's a problem. And the issue is I created a way of getting into trades that's kind of unique to me. And I wasn't willing to drop that idea. I called it the interval entry mechanism, right? So I created this entire Notion page where I just, kind of created my own theory, I guess you could call it, of how to get into a trade. And this kind of backfired. So I developed this back in May. I've been using it for the past 3 months, and it never yielded anything beneficial. Now, I wasn't willing to let go of it because it's something that I created. So one thing that I've noticed throughout my journey that I entirely, this is a cycle that I continuously repeat throughout my journey, is I'll arrive at some level of understanding, like something new that I think is completely and entirely unique to me, and I won't be willing to let go of that, even if it's producing negative results, because it's something that I created. And I think it's unique to me. And it's like, oh, I'm doing this way, and nobody else is doing this. This makes me better than everybody else, right? So I kind of just get on my high horse, and I'm not willing to drop that because it's what I created, and I think it's completely and entirely unique to me, and I think it gives me an edge over everybody else, which is simply not the case. So that's one of the biggest lessons that I learned this month. If you go back to the monthly review, there we go, that's better. If I go to adjust, see, this is my action plan for next month. I'm going to adjust. I'm going to focus on one mode of getting into a trade, which is probably going to be the change in the state of delivery. Stick to ICT fundamentals and read price. So if I go to last week's weekly recap, you can see at the end of last week, one of the biggest things that held me back. So one of the biggest lessons I learned. Back to the basics. For the longest time, I've not been trading ICT concepts as an ICT trader. Why? Because I've been trying to do my own fancy thing, which is what I just explained in the interval entry mechanism. When I get off my high horse and review the concepts, I'm now seeing and reading price with a lot more clarity and confidence as to what it should do. So I've been looking at the market in kind of my own way, this new theory that I kind of created, and it's been distorting my perception and my ability to read price. So when I went back and studied the 2022 ICT mentorship notes that I took on my journaling device, check out all this work that I put in. Like, this is actually crazy. The amount of hours that I've put into trading is nuts. It is actually nuts. So there's no way that I am not going to succeed at this. I'm going to succeed without a shred of doubt. So check this out. Okay. So this is the 2024 mentorship. This is where I studied. This is where things really started to click for me. I have taken so many notes for every single episode. You can see the pages in each notebook. This is 5 pages, 14 pages, 10 pages, 5 pages, 13, 12, 5, 8, 4, 7, 13, 1, 5. And if I go into each of these, they're all just pages and pages of notes. There's so much information in here that I totally forgot about. So when I settled in on the change in the state of delivery as my entry model, I went back in here and I created a refresher. So now what I'm going to be focused on is simply everything that I need to know about the order block and change in state of delivery. So I went back, reviewed these notes, and I created this. So now this is what I'm going to be focused on to get into a trade. And this is what worked on Friday. The reason I took a winning trade on Friday was because I just went into the market hunting a change in the state of delivery. And when I did that, this is what happened. So I'm getting kind of off on a tangent here. This is supposed to be a video about the monthly review, but this is basically kind of what held me back the most this month was my impulsive entries. I had a lot of trades with impulsive entries. And that's because I got my high horse, created this thing, wasn't willing to let go of it. And because of that, I wasn't seeing trades as I should have. So now let's go back to the monthly review and discuss what held me back the most. So from my performance stats, the things that I have highlighted in red are definitely things that I need to be working on. Those are the red flags. So my win rate, only 16%. My win rate in terms of day performance, I'm only winning 26.67% of the days that I traded. My max drawdown is huge this month. If we look at my max drawdown and the drawdown analysis, my max drawdown, where is it? $2,000 or 9R. We can see that over the course of the trading month, I found myself in huge drawdown. Now, if we look at the second month or the second week of this month, I was down over 5R. That was the month where you guys remember I was struggling mentally because I was getting kicked out of my grandma's house and I didn't know if I should move back home with my parents or get an apartment and fend for myself. Start fending for myself. Go back home, save money on rent, still pay for all my other living expenses, or I could actually get an apartment, kind of live on my own and do this and do that. So that decision really weighed me down mentally simply because I sat in a state of indecision and could not decide what to do. And that was reflected in my trading performance, right? Another huge thing that really negated my trading performance in the first 2 weeks of the month was trying to do the absolute most. I would literally wake up at 4 o'clock in the morning and get 2.5 hours of work and 2.5 hours of back testing before the market even opened. And I would only give myself a 10-minute break from the time that I'm back testing to the live trading session. So I would come to the market already burnt out from 2.5 hours of work, 2.5 hours of looking at the screens and using my mental faculties, and I'd come to the market burnt out. And how do I trade as a result? Well, this is how I trade a result. Look at my first 2 weeks of trading. Let's just filter that date range real quick. So from the 4th to the 15th, look how I traded. I took one winning trade and 13 losses. Now, this is a time period where I was trying to do the absolute most. And I'm telling you guys right now, the paradox of trading is the less you do, the more you do. Which is contradictory, right? But it's truth. The less you do, the more you do. Now, from the 18th through the 21st, you can see how I kind of turned the month around. From the 18th to the 29th, you can see that I turned the month around quite literally because I started prioritizing trading. I started prioritizing the trading routine or the trading session in itself, meaning I stopped waking up at 4 a.m. I stopped trying to get work done before the market even opened. I prioritized sleep. I prioritized stress management. And I would come to the market having that be the first thing that I did that day, meaning I would wake up at 6 o'clock, 6:30. I would either read a book, journal, or go on a morning walk, get my mind activated and fresh, get my body going, and have trading be the very first thing that I do that day. And I'm able to make much more quality decisions. I mean, you can see the difference, right? The performance here versus the performance here. Okay, this is the first 2 weeks and the second 2 weeks. So this is actually when I moved back home here. I stopped doing that 4 a.m. wake up and I started prioritizing the trading routine itself. Look at the difference that it made to my performance. My win percentage went way up. I took 3 winning trades, 8 losing trades, 1 break even. I'm actually profitable and a net P&L of 5R. In the first 2 weeks where I'm trying to do more, I'm down 7.5R. Isn't that crazy? Isn't that crazy? So I'm telling you guys, the less you do in trading, the more you do. That's the paradox of it. So another huge lesson that I learned throughout this trading month. Another thing that really, really spoiled this trading month was the way that I traded. The way that this model delivers, it delivers huge swings, right? Which is cool. And if I catch those huge swings, I catch a really, really big move. Like for example, on, what is it, the 7th, I caught this huge swing of 128 points. And the net P&L on that was 2.5 grand. Now this was when I was trading one mini. I was trading one regular mini contract. And I swung that shit for 128 handles. And from then on out, I went into each trading day trying to replicate this, trying to do the same thing, where I'm coming in with one single contract and I'm trying to swing one contract for over 100 handles. And another one of you guys mentioned this in the comments. You said, stop trying to go for the full swing. Low hanging fruit objectives. Pay the trader. Take partials. And I was like, you know what? Okay. Kind of ignored that at first. But as soon as I implemented a partial profit taking system, do you know how much easier trading got for me? But I only was able to implement a partial profit taking system since I started taking the eval. So now I'm coming into these trades and I'm locking in equity and just allowing a runner to go for the full swing. So now I don't have to be right. I don't have to be right to make money because I am locking in equity. Like for example, this trade, I locked in equity at these highs right here, right? And I held for a further objective. But in this case, I trailed the stop up and I kind of botched the exit on this trade. I left a lot of money on the table and I came back and I only secured a couple more points on the running contract. But now I'm trading a lot more stress-free and I'm not demanding that the market give me exactly what I want it to give me because I'm locking in equity and I'm taking partials. So a huge change to my trading this month, towards the end of the month, the last week, because now I'm attempting the eval, now I'm able to take partials, was implementing that partial profit taking system. Now I don't have to demand that the market give me exactly what I want and holding one contract for 100 handles. That's just making trading so much harder than it has to be. And I learned that the hard way. When you pay the trader, things get a lot easier. I mean, let's look at the trade that I took on Friday. Look at the trade that I took on Friday, right? I'm locking in equity here, and I'm allowing the market to run, see if it gives me anything extra. So I'm taking off the majority of the position at the low-hanging fruit objective that I know with confidence the market can deliver, and anything else is extra. The further objective that I have confidence in that the market should deliver. But I took so many trades this month where I was aiming for the full swing, and I had a winning trade. Like, for example, if we go to this trade right here, you can see that this is one of my biggest losses on the entire month. I lost $470 on this trade, but it should have been either a win or a break-even trade. Matter of fact, the market delivered the exact level that I mentioned in my pre-market plan on this setup. I was aiming for the new day opening gap. We can see that if I go to my daily journal, you'll see that. So what is the draw on liquidity? The new day opening gap paired with the previous day settlement and session liquidity. So we can see that the market delivered the new day opening gap paired with previous day settlement, right? So I should have taken off at that level. But in this case, I'm trying to replicate what I did earlier on in the month, where I swung one contract for 128 handles, and I failed to take off at the draw on liquidity, looking for more, wanting more, demanding the market gives me exactly what I'm looking for on that trading day. And what happens? The trade comes back on me, knocks me out for a loss. In this case, I led myself down the road of hope, and I got knocked out for a loss. I was up over 80 handles on this trade, and I let it turn into a losing trade. Why is that happening? Well, it's because I'm trying to demand that the market give me exactly what I'm looking for, swinging one fucking contract. Now, on this trade, if I had a partial profit taking system, I'm taking off the majority of the position at the new day opening gap and previous day settlement. I'm locking in equity, and I'm letting the last contract run. Now, in this case, the last contract would have come back for break even. But guess what? I have equity locked in at the draw on liquidity at the level that I'm looking for that I mentioned in my pre-market plan. In this case, I let it turn into a loss. How does that even happen? Well, it's because you're greedy and you want more, and you're demanding that the market give you exactly what you want, which is never a good idea. So you can see in the review, I fucked this trade targeting previous day low when the draw on liquidity in my plan delivered perfectly. And I fucked this trade with my exit. I should have moved to break even, but held on to the hope of it working out like I did on Friday. So I spoiled another solid setup although I'm glad this trade did not work out because it's not my model at all. You can see on this trade as well, no partials locked in, right? Taking one contract, aiming for the full swing, and what happens? I'm up over 60 handles and comes back for a loss. The same thing on back-to-back trading days. This should have been a green day. This should have been a green day. I have other examples of this as well from throughout the trading month. If I go to the report and I go through the tags, let's see on trades where I botched my exit, which are probably the two trades that I just reviewed. So I botched the exit on this trade, of course. That's the one that I just showed you. I failed to lock in a lot more equity than I should have. And this came back for break even as well. So I have a lot of trades, a lot of solid setups that I took that I left money on the table big time. So say I did everything perfectly in a hypothetical situation, I would be profitable on this trading month. Now in this case, we can see the same thing, right? So one of my biggest issues is letting these winning trades come back on me and failing to lock in any equity. In this case, I knew to take off at the low a day, but guess what? I'm trading one contract, so what do? I'm aiming for the full swing. It doesn't deliver that. Takes this low, and I have a protocol that states if I'm up over 60 handles on a trade, I have to move my stop to break even. I can't let that turn into a losing trade. So in this case, I do. It comes back and knocks me out for break even, and then it delivers like that. So if we go to the review, I knew to just target a new low a day to be in compliance with the plan I've created for myself to fix the mistakes I've made in the past weeks, but deliberately ignored that. So there you go. The trade comes back on you and knocks you out. Let's look at other examples where I literally spoiled a solid setup. And then I had two trades. If I remove the date range. And then I had two trades where I choked the stop on the position. In both trades, I was executing on the order block. And the market came back and stopped me out just before it delivered to my objective. So there's going to be trades like this. There is going to be trades like this. See, the market came back, stopped me out. My stop loss was above this up candle. We go to attachments. So I sold short on this up candle right here, right? Anticipating that to be the bearish order block. I came back up, stopped me out, and then rolled in my favor. And you can see a similar situation on this trade as well. This one right here. Now this was actually this week. Well, this was a solid setup. I was looking for sells if the market drove above this gray level right here. That's the previous daily high. I was looking for sells on a drive above that. I sold short this up close candle, and let's see what happened. Market came back, stopped me out, and then dumped to my target. So just little things, little adjustments that I can make that would definitely put me on top. Now the partial profit taking system I know is going to be a game changer, 100%, 100%. So if we go to my action plan for next month, what I'm going to keep doing is implementing the partial profit taking system. Probably add focusing on locking in equity. There we go. And I'm going to eliminate my current entry mode, the interval entry mechanism. I'm going to get off my high horse, and I'm just going to focus on one mode of getting into a trade to combat all the impulsive and early entries that I've been taking. I've been getting into way too many trades. You saw from my reports, I'm getting into way too many trades where there was actually no confirmation at all. And so my focus for next week, something that I need to focus on as well, is just being aware of my tendency to want a low resistance liquidity run when creating a market approach. This is something huge that I discovered from doing my weekly review. Let's go to the market context and market approach review. So let's see if I can find any display of it in here. Okay. But I basically just studied my market approach throughout the entire month, and I noted that I have a strong tendency all month to frame the incorrect approach because I'm looking for a low resistance liquidity run. So I have framed a lot of bearish biases that are incorrect, looking for my bearish premium gap opening setup. Now, what does this mean? First of all, I think it would make sense for me to show you what a low resistance liquidity run is and when that actually delivers. So let's see. I think this trade is a great example of that. Okay. Let's see if we can go to a 15-minute. Okay. Note how right here, there's like a really clean, smooth edge in price, right? Kind of looks like a trend line. So you could draw like a really clean horizontal line right here. That's going to be low resistance sell side liquidity. So I have an entry model where if we have a premium gap opening, meaning we gapped up from where the market closed yesterday in regular trading hours, like we do here. This is previous day settlement. And this is 9:30 the following trading day. When we gap up and we have smooth sell side liquidity below the marketplace, usually I have a really, really solid setup, really solid playbook that delivers, that offers a low resistance liquidity run. You notice how it just attacks, you know, these lows in one quick move and 2 down candles on the 15-minute time frame, boom, boom. And all this liquidity down here is attacked, and that really smooth edge is made jagged. That's basically what a low resistance liquidity run is. And this is my top performing playbook. Like when the market presents this exact setup and this exact playbook right here, it delivers like crazy. Another good example of that would be this trade right here, right? So because I took this huge swing that worked, and you're going to see that literally the same thing formed in price. We have a really clean, smooth edge overnight. This is low resistance sell side. We have a gap up opening, trades up, rejects the high of day, rejects the new day opening gap, and then we have a low resistance liquidity run. So it's essentially the same setup. Now I note that I have a tendency to go into each trading day looking for this kind of run on the liquidity presented in the overnight session, just because, you know, I've executed on this setup multiple times and it delivers really, really well every time I do. So now I'm subconsciously going to each trading day looking for this exact thing. My market approach is just going to be framed, or it's going to be extremely influenced on the liquidity presented in the overnight session, because I'm looking for a move like this because it's worked so many times in the past. So now instead of actually using the approach and the process that I use to arrive at a market approach and set a bias for the trading day, now I'm subconsciously weighing a lot on what I want to do for the day based on what I see in the overnight session instead of actually following that process. So I'd note that I have that strong tendency to do that this month. And this is something that I did this month, this entire month. This entire month, I've been making this same mistake. I'm noting I have this tendency to hunt, to really, really hunt that kind of move. And that's basically why my market approach on Friday was extremely indecisive. So if you go to bias tendencies, strong tendency all month to frame the incorrect approach because I'm looking for a low resistance liquidity run. So I'm looking for this setup. This is my best performing playbook. It's not my best performing because I keep coming into the market hunting it. Let me open up another tab here. If I go to playbooks, right, over the course of this month, you can see how many times I came into the market hunting that exact move because that's what's worked so well in the past. I've attempted that idea 10 times, and it was my most costly playbook because I'm subconsciously going into the market hunting this setup every day because that has led to some of my best trades. So that really shows me how my wins have an impact of how I see and perceive the market moving forward in the future. Now I'm going into the trading days expecting something like this to play out subconsciously without even knowing it. I have a really strong tendency to look for that kind of move. So that was a huge discovery that I made. And that was the reason why I got my market approach incorrect these past few trading days, because I'm looking for that kind of move. So if I go to, let's just go to the daily journal real quick, and you'll see my tendency to do this. Like I'm looking for it right here, right? Low resistance sell side created overnight in pre-market. You can see that I'm annotating the low resistance sell side. So what I wanted to look for, right? So I'm noting this smooth edge in price. So I'm deliberately ignoring the obvious market retraction that we have that goes below the previous daily low. And I'm just looking at the low resistance sell side, and I want to see a run on that because that's what tends to set up my best setups. And I believe I do the same thing on Thursday. Check this out. Low resistance overnight sell side, right? So now I'm kind of looking for that same exact move. And there was a couple of other examples of this. I literally went back and saw myself making the same exact mistake that I did earlier throughout this week or throughout this month. And it was kind of it was definitely eye opening. Like, damn, I've been making this mistake without even knowing it the entire month. So that is what's really affecting my ability to frame a solid market approach. And besides that, let's see what else we got. So this is also huge as well. 81% of my losing trades occurred in a back-to-back streak. My losses are clustered, not isolated, and I'm compounding damage fast. So my max consecutive losses was 8, bro. I took 8 losing trades in a row. That's not good. My max drawdown was 2.5K or 9.10 R. So why did I allow myself to go on such a losing streak and apply so much damage to myself? Well, partly that's because a lot of self-sabotage that I did to myself, which is simply not taking partials and not locking in equity, only trading one contract, only trading one mini, and swinging for the full swing, demanding the market give me exactly what I'm looking for. So that's why this month I need to focus on keep implementing the partial profit taking system and just focus on locking in equity. Another reason would be market approach. One of my main constraints, we just went over how I'm subconsciously framing the incorrect approach because I'm looking for this type of move. I'm looking for these huge swings subconsciously, like deep down. That's what I want the market to do. But there's a lot of things in price that tell me that it's not going to do that. And I'm deliberately ignoring the process that I use to arrive at a market approach because I'm looking for these huge swings, because that's what's worked so well in the past. So I'm noting how my winning trades are influencing my tendency to frame an incorrect market approach. It's pretty crazy. But it's awesome how you can connect the dots when you collect all this data. The only reason I'm able to arrive at these conclusions is because I do this work of just filling out the same process every single day. Like, this is literally what I do every day. I follow this approach right here. The optimal market approach. So this is my pre-market approach. This is just a couple of things that you need to annotate each and every trading day, which is going to be your pre-market plan, your approach to the market, what you're looking for. Then intraday, journaling the session, journaling intraday as you're going throughout the session, just making a note of how you feel and how you're reading price and what you're looking for. And then obviously you need to reflect post-market on how you felt going to the day, what rules did you break and follow, what did you learn? Obviously, you have to learn. If you're not reflecting on what you're learning, then you're not growing, you're not going anywhere. You have to ask yourself what you did wrong and what you did right. And then after the market closes, I forgot to upload my screenshots here. But after the market closes, you come back and you got to ask yourself, was your bias correct? Was your draw on liquidity correct? What actually happened? What did you plan to do? How'd you execute it? What'd you miss? What'd you get? And I have to upload my screenshots here. I forgot to do them. But you can see that I do this every single day. And this is the only reason why I'm able to connect the dots so well. It's because I follow this process and I do this process of data collection day in and day out. And folks, this is what allows me to continuously progress. Because if you're not knowing where you're going wrong, how are you going to get better? You can't expect yourself to get better if you're not doing the work of reflecting, collecting data, because that's what's going to allow you to connect the dots. You connect the dots, you feel like, okay, when I do this, this happens. Like, I literally just explained to you everything that I've done wrong this entire month, and now I know exactly what I need to do the following month. I have a game plan for the following month to get better. Now, after this video ends, I'm going to plan my week. I'm going to plan out my trading week, plan out my work week, and create actionable steps that I can take to get better next week. We're getting better on a week-to-week basis. And this is it. This is it, folks. I'm telling you, I'm on the dawn of profitability right now. It's crazy. So everything is reviewed here. Now, my monthly review, I don't want to sit here and review every trading day again. I just want a brief overview of the main points from my trading this month, which is what I've done here. Now, I went a little crazy in market approach, but besides that, go to pattern identification. The recurring mistakes that I'm making is I'm consistently framing incorrect and indecisive market approaches, leading to a multitude of problems and executions intraday, or I'm aiming for the full swing / high R trades, and I'm allowing winning trades to come back on me for a loss, which I discussed, and impulsive executions at the market consistently repeated throughout the month, whether that be at 9:30 or after a loss. So I explained this as well. So my weaknesses, I'm framing one idea that I have confidence in. I lack in market approach, and this is the root for all poor trading sessions. I'm consistently wanting more, demanding price to give me exactly what I want, reflected on my exits / targeting, leading to a lot of give back throughout the month. And my entry protocol is rather loose, allowing for a lot of impulsive entries. Okay, so just 3 things max. I've really been struggling. I'm not going to say I was struggling, but I'm trying to find the proper monthly review that allows me to extract the most out of that month. Now, I'm extremely analytical, and you guys, a lot of you guys in the comments say you love to overcomplicate things. I'm not really overcomplicating it. That's just how I operate. Like, I have to know everything, and I have to have every single little detail. So it's really hard for me to come to this and do a monthly review and only list out 3 things, the top 3 things that I did wrong. But I forced myself to do that here, and it's just, you know, headlines of this is what I did wrong, 1, 2, 3. Okay, those are 3 things I need to work on in the following month, because it's going to be extremely difficult for you to make any kind of change whatsoever if you're noting that you do this wrong and this wrong and this wrong and this wrong and this and this and this and this and this, and you have 10 different mistakes that you're trying to correct all at once. It doesn't really work like that. So I'd narrow the focus down to just 3 things to implement change, 3 things I can implement change on, and just work on that in the following month. So weaknesses and strengths. My strengths being coming to price with confidence and conviction and one idea leading to my best sessions, and despite many consecutive losses, my risk stays consistent over each individual trading day. My win-to-loss ratio shows my strong ability to hold for longer trades and maximize winners. By the same token, I fall by this because I'm aiming for those huge swings, and I'm demanding price give me that with one contract, but now I have a partial profit taking system, so that should definitely curb this 100%. And then a playbook analysis, I ran over this with you guys as well. My bearish premium gap opening setup, I took 10 trades, 10% win rate. I had that one huge swing, right? Because I had that one huge swing, it's going to influence the way I'm perceiving price when I go into following trading days, because I'm going to be looking for the same thing to play out again. So I attempt the bearish premium gap opening setup the most because when it hits big, it hits big. And I'm chasing that big swing and subconsciously coming to the market looking for it. I explained this. And then my performance by time of day. So decent chunk of losing trades I take between 9:30 and 9:45 are because I've mistimed the move, 30% of them. There's basically an even distribution of my top 3 mistakes made. Early entry, incorrect approach, and impulsive entry across the first half hour of trading. And the vast majority of my trading occurs in that first half hour of trading. And then in my execution, repeated mistakes that I make. The entire month, I'm impulsively jumping in without confirmation, executing very early into the open. So the improvements that I'm going to make, or the improvements that I made throughout the month, I found a way to get on side. Nothing really good besides that. So I really lacked in my execution, and that was noted in the comment by TWiz93. Appreciate you, TWiz93. And that's basically it. Top 3 lessons I learned. Paid the trader. Why I'm always indecisive, because I'm subconsciously looking for that low resistance liquidity run, like I explained. And my entries are too loose. So my action plan for next month. I'm implementing the partial profit taking system, focusing on locking in equity. Eliminate. What am I going to get rid of? My current entry model, because it's way too loose. And it allows me to get into trades way too easily. So I need to focus on one thing, one mode of getting into trade. That's the adjustment that I'm going to make. But I'm also going to be aware of my tendency to want a low resistance liquidity run when creating a market approach. Cool. This is the adjustments that I make: market selection, entry rules, risk rules, exit rules, sizing rules, and that's it. Folks, let's think about this for a second. If I'm doing this work consistently, is there any possible way that I can fail at this? Seriously. There's no fucking way. There's absolutely no way. You can't give your heart and soul to something. You can't give it your absolute all, everything. You can't give it a piece of your soul and not fail at it. That's not how this shit works. Like, you have to get it by law. If you put this much effort into your work, into whatever it is that you want to do, you can't fucking fail. You cannot fail. You can't. It's impossible. You have to get it by law. Now, this is all the sacrifice that I have to make in order to get to where I want to be. But the sacrifice is, of course, worth, or where I want to be is, of course, worth any price. I'm willing to pay any price. My whole life has changed to revolve around this and becoming an exceptionally good trader. And that's exactly what I intend to do. And that's exactly what I'm going to do. With confidence, without a shred of doubt. I have so much faith in myself. I have so much belief in myself that I'm going to make this work. And my action supports that. My persistent action supports that. So now I believe in myself so much to the extent now where I've got a process and I'm just repeating it. And I know without a doubt that I'm going to get that 5K payout from Top Step. I'm not worried about it at all. Literally, I'm fearing nothing at all because I've finally arrived at a system, at a process, and I'm focusing on doing the right things. This is it, guys. This is fucking it. Like, we are here. We are here, literally. We're here. And I appreciate you guys sticking by me, watching me do it too. Watching me do it. It's awesome. So let's keep working and let's keep growing. And let's just fucking win. Let's just win at life. What do you say?